If I ask you what is the most popular kind of financial institution in India, you will probably have just one loud and clear answer: banks. But what if I said there are other kind of financial institutions which are gradually becoming as popular as bank, if not more? Hi, I'm Manisha Singh Chauhan, a startup advisor at Setindiabiz, where we provide tax compliance and IPR services to businesses across India. In this video, I will discuss the concept and feature of non-banking financial company which provide a range of financial services akin to banks but are way different than them. The topics I will cover includes what is non-banking financial company or NBFC. What is the difference between a traditional bank and NBFC? What is the scope of activities of an NBFC? What are the type of NBFCs? And what are some of frequently asked questions about NBFCs? So let's begin without any delay. What is non-banking financial company? Non-banking financial company is basically an incorporated company which provide financial services like loan, microfinance, leasing, hire purchase, credit card facilities, insurance policies, asset management, debt financing, investing through securities, and so on. These are licensed and regulated by Reserve Bank of India and are well known for their versatility. Some of the popular examples of NBFCs in India include Muthoot Finance, Bajaj Finance, Mahindra and Mahindra Finance, Tata Capital Finance, Aditya Birla Finance, L&T Finance, and list goes on really long. But traditional banks and financial institutions already provided all these services in India. So why exactly did we need an NBFC? Well, let me explain. What is the difference between banks and NBFCs? There are many similarities between bank and NBFCs. For instance, they both provide financial services and are regulated by Reserve Bank of India, but they are not exactly the same. An NBFC does not operate with a banking license. Instead, it receives an NBFC license by the RBI for conducting its operation in India. More importantly, unlike banks, NBFC cannot accept demand deposit or issue checks to their customers. You can say that the primary difference between the two lies in their functionalities and their roles at its best supplementary to each other. When it comes to their contribution to the nation's economy, the overlap of their services ensures financial inclusions and cater to the wide variety of consumers. Let's dig a little deeper into this. What is the scope of NBFC's services? Well, the scope of an NBFC can be analyzed on two parameters. The first being the wide range of services it offers, which we have already discussed in the beginning of this video. The second being the wide range of customers it caters to by tapping into the sectors where banks have historically been unsuccessful. The best example of this would be small businesses and startups. Banks are larger financial institutions, some of them being too big to fail, so they are usually skeptical of lending to small businesses like MSMEs and startups, which according to them neither have the resource nor are capable of generating enough revenues to pay back their loans on time. This is why NBFCs and their services are most in demand among them. They allow these small businesses to get every bit of financial assistance they need. By serving the undeserved section of the society, NBFCs play a crucial role in the country's overall financial system. An understanding of its various types will clarify things better for you. Different type of NBFCs in India. NBFCs can be classified into various categories based on their size, liability structure, and nature of activity. Let me present a few of them to you. Asset Finance Company. The type of NBFCs is used to finance physical assets that correlate to productive or economic activities such as automobiles, tractor, generator sets, earth moving and materials handling equipments, industrial machineries, and so on. Investment company. The primary activity of this type of NBFC is to help investors acquire various debt and equity financial instruments. Loan company. These are mostly involved in providing credit to public through loans and advances. Infrastructure financing company. The category of NBFC provide infrastructure loans which are non-repayable over a specific period of time. They play a crucial role in the development of India's infrastructure sector. Systematically important core investment company. Since this is an investment company, its basic business activity is to help investors acquire debt and equity financial instruments. However, such acquisitions need to be made by following very specific conditions put forwarded by RBI. They are too big to fail nature actually makes them systematically important. Infrastructure, debt funding, non-banking financial company. These NBFCs facilitate the flow of long-term debt into infrastructure projects. They raise resources through the issuance of rupees or dollars dominated bond with the minimum maturity periods of 5 years. Microfinance institutions. These provide small-scale financial services to low-income individuals and businesses at favorable rates, thereby catering to their specific need by promoting financial inclusion. Lastly, we have non-banking financial company factors. These type of NBFCs are primarily involved in factoring businesses. Factoring is basically a financial transaction by which a company sells its invoices to NBFCs, which in return provides them immediate liquidity for the concerned amount. The type of NBFCs we just discussed were based on the nature of business activities. However, the RBI has recently introduced new basis of classifying NBFCs for better and more efficient regulation. So, let us see what it is. Scale-based classification and regulation of NBFCs. The scale-based classification of NBFCs is based on their size, complexity of operation, and the scale of associated risk. Under the classification, we have 3 layers. First, base layer, which are NBFCs with the asset up to Indian rupees 1000 crore. Second, middle layer, which are NBFCs with the asset of Indian rupees 1000 crore to Indian rupees 5000 crore. And upper layer, which are NBFCs with the assets of more than Indian rupees 5000 crore. Each of these layers are subject to different regulatory requirements set forth by RBI. For example, NBFCs in the upper layer are required to maintain higher capital level and liquidity ratio than NBFCs in the base layer, and so on. The scale-based regulation was introduced in October 2021 with the objective of improving the regulation and supervision of NBFCs in India. The goal was to increase the stability of NBFC sector and reduce the risk of systematic shocks. With this, we have complete our discussion on non-banking financial institutions. I hope I have managed to answer all of your questions. But if you still have any doubts, you can post your queries in the comment section. For detailed guidance, you can connect with our experts directly. The contact details are given in description. And if you found this video helpful, like, share and subscribe to our channel for more informative content ahead. Don't forget to hit notification bell so that every time we post a new video, you are the first one to get notified. Thanks for watching. Watch our other videos as well.